Today's Animal Spirits is brought to you by Victory Shares, the Victory Shares Free Cash Flow ETF. Victory Shares wants to know, are value indexes measuring the wrong thing? Finance 101, I learned this in school. The value of a company is a present value of future free cash flows, correct? Okay, so free cash flow yield is a key fundamental metric, measures companies' ability to generate cash, indicating financial health. We all know this. Victory Shares believes they have a better way to measure both value and quality. So they think the traditional free cash flow measures, which everyone knows, may be falling short, and they have an improved approach for evaluating free cash flow.
So, for example, not just looking at trailing measures, but forward estimates of a company's free cash flow as well?
Right. So they're saying that, like, past free cash flow, you may be, like, overlooking future growth. And that's where they kind of marry the two approaches, I think. So they're looking at free cash flow and a growth filter to remove companies that have weak growth prospects. So high-quality companies, trading at a discount, favorable growth prospects.
Speaking of that, you know, their largest sector weighting is healthcare. And I would certainly say that fits the bill of things that are out of favor.
Oh, interesting. Okay, so see the link in their description for more. Check out the Victory Shares Free Cash Flow ETF.
Welcome to Animal Spirits with Michael and Ben. Before we get into the show today, talk about Thanksgiving, a review. Maybe Ben has altered his thoughts. I don't know. We'll find out. On November 29th, the day that this comes out, actually, for financial advisors, we're having our second pilot episode of the Smoke Show. This time on the show, we've got Flourish Cash, which is a company that helps advisors help their clients earn more on their cash in their checking account. And I don't want to step on too much of the material, but I just want to say one thing. There is a feature on Flourish Cash that allows you to, every 2 weeks, you could set like a balance in your checking account. So let's just say that you want to keep $10,000 in your checking account. So if you've got more, money will get swept out of your checking account and go into this high yield savings account.
I like that feature.
And if you have less, let's say you've got $6,000, it'll pull $4,000 from this seamlessly, automatically every 2 weeks.
Yeah. Cash management is so hot right now, right? Especially, I think, for clients, this is something they're finally paying attention to. This is good timing for this.
So Flourish Cash is available only for clients of financial advisors, and The Smoke Show, episode 2, is also only available for financial advisors. So hit the link in the show notes if you are interested in hopping on the live show at 2 Eastern. All right, so Ben, how was your Thanksgiving?
My Thanksgiving was good. I had a nice Thanksgiving. My only thing about Thanksgiving, I didn't say it was bad or overrated. Christmas is better.
I believe you said, eh?
You know what the best part about Thanksgiving was? Is the next day when I could finally appreciate, like, looking forward to Christmas. That was it. Listen, man,
Wow.
I had to watch the...
So you're doubling down. You're doubling down. The only good thing about Thanksgiving is looking forward to Christmas?
Listen, we hosted. We had a good day with family. It was great. We wore our Tropical Brothers shirts because that's what we do on the holidays. I told you to do... Did you do it or not?
I forgot.
Okay. I think you wimped out. Yeah, Thanksgiving. But then you can look forward to Christmas. That's the best part of Thanksgiving is it's like a back-to-back holiday. I'm just saying, Thanksgiving can't hold a candle in the wind to Christmas. That's all I'm saying.
Well, I can't speak up there, being that I don't celebrate Christmas. Unfortunately, it looks like the greatest holiday of all time that I'm not taking part of.
Fair. You're cash on the sidelines for Christmas.
But I feel like some Jews have adopted the Christmas celebration.
Why not? It's not like most of the people celebrating are religious, right?
Here's how Jews celebrate Christmas. We eat Chinese food.
Yeah, that's what I did too. Okay, so the economy is so terrible right now that we had the busiest day ever at airports in the USA from TSA. This is, I guess, Sunday was the busiest day ever for screening from TSA people. It was almost 2.9 million. People show the pictures of the planes.
I've never been to the airport for Thanksgiving. It looks like a nightmare.
I don't think you could pay me to travel on Thanksgiving like that. No way. We drove a little bit from Detroit, and even that is traveling on Thanksgiving. You couldn't pay me to go to the airport. Carl Quintanilla, Black Friday shopper set an online spending record per Adobe.
Why is Adobe reporting on this?
That's a good question. Are people printing out their receipts on PDF?
I'm a bit confused.
I don't know. So anyway, the things are so bad in the economy right now that everyone's just traveling and spending money to cope. I think that's where we're at. Fair? I'm being facetious. All right. What else do we got here?
All right. So this is interesting.
Isn't this a thing, though, that we probably hit a new Black Friday record every year?
That's a good question. Barry used to do a post every year about
Oh, that's right. Like 12 years in a row.
how bad economists were at predicting retail sales.
That's true. About Black Friday. Oh, Barry, that's right. Where was Barry's Black Friday post this year? It's like a tradition.
So do we break the record every year? I don't know. It's a good question. I would assume for the most part.
I broke the record for most emails ever in my inbox saying this is the biggest sale ever, 40 to 50% off. Apparently inflation, we had a reprieve for one day because literally everything was 50% off everywhere.
Did you buy anything?
Yeah, a few clothes, nothing special. Pair of shoes. I don't know. But remember how? Can you believe that people used to get up at like 5 a.m. and go shopping at an actual physical store?
I think that's still a thing.
Really?
Probably not as common as it used to be, or not as big of a deal as it used to be.
But I mean, that was a thing. That was back in our day. We didn't.
Yeah, but
buy stuff online.
back in the day, you can get a $2,000 TV for $1,100. Like, yeah, you go to the store for that for sure.
Yeah, but now you can just get one because it's a Friday.
So Carl Quintanilla tweeted a chart from Deutsche Bank. There are more global cuts coming through than hikes, which is the first time that's been the case since January 2021.
24, this is really going to ramp up, don't you think? This has to. I think like the global hiking cycle is done.
You and I haven't really discussed this. Do you think that the Fed is going to cut rates in 24?
Definitely. I think, I would lean towards yes more than no if I'm doing a grand up attack. But yes, I mean, like probably in March. And I don't think it has to be because the economy is cooling, but I think if inflation continues to fall, that they kind of have to, don't they?
Why? Just because those rates are no longer necessary?
Yeah.
Mission accomplished?
I think that would be a mission accomplished thing.
So last week we spoke about how long it's been since we had an all-time high. You wrote a post about this that we didn't include last week, so I wanted to just bring it up. It's been 470 something, maybe 480 days. And this is, according to you, the fifth longest streak since 1950. Is that right?
That was my calculation. The other ones are kind of crazy because from 1960.
Oh, wait a second. You know what I just realized? You came to the Michael side. You now use trading days instead of. You used to use calendar days, which to me made no sense.
No, that's because the data I have is only trading days. So you're right. I flip-flop on that. That's fair.
Okay.
But the craziest ones here.
Fifth longest streak ever? Wow, that's kind of.
If you look, there wasn't a new high from 1968 to 1972, and then you had new highs, and then a year later, you had another bear market and then a long drought from 73 to 80. And then the same thing happened from 2000 to 2007. You had a few months of new highs and then a crash again. So those periods were really both like 13 years or something.
Yeah, the new all-time high doesn't even count because it was for a second.
Yes, it happened. It was a blip. You came all the way back and then you crashed again. So
all right, so do you want to say like 1968 to 1980 really, and then 2000 to 2013? I mean, yes, in 2007 you made new all-time highs, but it was I don't even know if it was for a couple of months.
Right. So that's what I'm saying, that those periods are. And it's funny because a lot of people, we're long-term aficionados, we're long-term optimistic about the stock market. People will shove this in your face, be like, see, the long-term doesn't always work. And my retort to that is always this is just part of investing in risk assets. You can't get the good returns if you don't have crappy periods like this. I think it goes hand in hand.
I think a lot of people have sort of swept under the rug that we took our medicine in 2022.
Yes. And
they're looking at 2023 returns in a vacuum, like Amazon's up 75% and all of these mega caps. They got annihilated in 2022.
Right. They've basically gone nowhere if you look at a 2-year period. This is a good
I think Google and Amazon, I'm pretty sure both fell 55%.
Yeah. I mean, Nvidia was down almost 70%. It's you look at these crazy returns here, but it's
and Facebook as well. How much was Facebook down 70?
Close to 80 probably. Good one from bar chart here. S&P 500 is up almost 5% since the Federal Reserve hike on March 17th, the first hike on March 17th, 2022. There have been a total of 11 hikes while raising the rate from 0.25 to 5.5. I mean, obviously we had the drawdown in there, but it is crazy if you think just in terms of rates. I remember everyone said, listen, higher rates using just the discount factor has to mean lower stock prices. And it did for a little bit. But I'm sure.
Well, how about this? What if the market fell in anticipation of hikes and now it's rising in anticipation of cuts? So it's not like the market is adopting these 5% rates forever or ingesting them forever. It's looking forward to 3% or whatever the number is.
Maybe. I just think that the rate mechanism thing, like it's not like a scale that goes like this up and down where it's not always that easy. That's my whole point.
You know what I noticed? I was looking at this chart the other day at the S&P 500. You know what I see on here? I see a V. I mean, the past couple of weeks have been a V-shaped rally.
Oh, from the quick 10% correction we had?
From that 10% correction where we closed below the 200-day.
Oh, so remember you said V-shaped rallies are over. Are they back?
They're back. I mean, I'm not predicting. I'm just saying that's a V.
That is, you're right. That's a V.
It's been a while.
Whatever happened to your deep V t-shirt that you used to wear all the time, remember?
I'm glad you asked. Boom.
Okay.
Well, actually, no. You're talking about like the Hanes V's. I had to retire those.
Yeah, they were pretty bad. Let's be honest.
Well, listen, you graduate. You grow up a little bit.
You had like an accordion neck on a lot of those. All right. Okay, really good set of charts from Apollo. They have this like 180-page deck on the credit market outlook, and they say a default cycle has already started. So they say U.S. speculative grade default rates are already rising. They show from when the Fed started cutting to these default rates, and they've gone from, I don't know, below 2% in some cases, and they're looking at loans and high yield bonds, and they are now 4 to 6%, I guess. So the defaults on these, again, speculative debt is rising. So I'm guessing this is like the worst of I don't know if that means subprime or what, but so anyway, he also shows the yields. Investment grade debt is yielding around 6.8% now. High yield is 8.5. If you had to pick there, what doesn't corporate debt seem like the better choice there versus high yield, since spreads still haven't really blown out? Because look, I mean, the next chart shows this. Credit spreads are not pricing in a recession. Do people have like lines in the sand on these things where they realize like, because they always say like the Fed funds futures are not pricing in this or not pricing in that, or the credit spreads are not. What's the line in the sand for this is pricing in a recession and this is not? Do we have one?
With the level of yields?
Yeah.
I would say it's probably the spread, no?
That's what I'm saying. But they say the credit spread are not pricing in a recession. That's what the weird thing is.
So I think investment grade yielding 6.8% is more attractive than high yield yielding 8.5.
Okay. A good point, though, brought up by our very own Bill Sweet on this. So a lot of people are saying, like, why would you invest in stocks when you can get almost 7% in investment grade? And it depends where you hold that money if you're going to compare that to stocks. Because if you're holding money in a taxable account, as Bill says, you pay taxes on stocks later, besides dividends or sales, but you pay taxes on bonds now. So making a comparison of bonds to stocks, I know this is a dorky point, but it's worth making. That makes sense?
Yeah.
You can't compare bond yields to stock returns unless we're taking taxes into account. All right, this is a crazy chart from Joe Weisenthal, Nvidia's parabolic revenue growth. And they already had like an unbelievable run. And then their quarterly revenue growth just skyrockets. And I feel like a lot of investors are constantly trying to prepare for the next risk. Like, what's the next black swan? What's the next recession? What's the next shoe to drop? I don't think anyone really, maybe you don't have to prepare for like an upside risk. But don't you think AI is a huge upside risk if you're a conservative or defensive investor?
Absolutely. I mean,
like looking at a chart like this,
ChatGPT was unveiled in November, right? So 2024 is really like the first year. Is that going to slow down or stop in 2024? No.
So I think we've talked about this before, but like if you had to have an upside hedge, doesn't it just have to be the NASDAQ 100? Is that the easiest, simple answer to like spread your bets a little bit so you can be sure to take part in this?
An upside hedge? Or I mean,
what would you if you thought like there's a 10% chance that this goes into a bubble or goes like what would you buy? Because there's not that many AI stocks, right? I mean, obviously Nvidia is an answer, but if you don't know who the winners are going to, isn't the NASDAQ 100 the simplest answer?
So let's see. So Apple and Microsoft, that's 22%. Amazon's another 5%. Nvidia is 4%. And then Facebook is another 4%. Yeah, sure.
I don't know. Just a thought.
So 2023 is the opposite of 2022. It's a mirror image, right? Large cap growth got destroyed in
Value
22.
did well. High quality did well.
Monster comeback.
Dividend stocks did well. Now it's reversed.
Exactly. So investors are always fighting the last war. Like this is one of the
how many
fixtures.
people do you think did the opposite? Did the George Costanza and did the opposite, and it hurt them? So like they missed out. They were in growth. They missed out on the value, high quality stuff, and then they thought, you know what? Maybe we should go to that because inflation's here.
Oh, a lot.
It had to happen to people.
A
Hedge
lot.
funds, yeah.
Meaning like you chased tech in 22, got crushed, rotated into dividends after their good performance. Absolutely. I mean,
then it reversed.
Sometimes that's just the way it goes. All right, so Bloomberg had a great chart. $60 billion net inflows into dividend-focused U.S. ETFs in 2022, which is a record. And effectively zero inflows today. This is just an astounding collapse. And we talked about how interest rates impact stocks. Well, dividend payers are getting annihilated, at least relatively speaking, relative to what you could have earned just in the index, because those are really competing with investment grade bonds and cash.
The funny thing is, again, this is like fun with numbers, but if you compare the start of 2022 to now, everything is probably relatively close. Like value versus growth, dividends versus non-dividends.
If you look at the 2 year period, the full 2 year period,
it's probably pretty close. I wonder remember we talked for a long time about the call option stuff, how after 2022, a bunch of people put all this money into call option strategies. I wonder if the money into those is slowing down as well.
Into selling calls.
Yeah, because a rip-roaring, up market like this year is a year where that kind of strategy is bound to lag. It has to.
Sounds like you're sending out the bat signal to Jeffrey Batnick. Speaking of, Jeffrey tweeted that the meme ETF is closing. Hey, did you see Dumb Money yet?
No, I don't know if I'm going to see it. I don't know if I need to. We lived through it. What are they going to show me in the movie that I don't know? We literally lived through it and watched it every day. Did you see it yet?
I did not.
Like I do feel like we're jumping. Like I'm surprised that there's going to be an AI movie probably about what happened with OpenAI and Sam Altman, and I feel like we're at a rush to make everything that happens now immediately a documentary or movie, and I don't think it needs to be since we live it on social media when it happens.
Yeah,
that's personal opinion.
Anyway, so the Roundhill meme ETF is closing. I kind of can't believe. So Jeffrey tweeted a chart of the meme ETF versus ARK. That I don't mean to be disrespectful here, but I mean I don't know what else to say. ARK is the meme ETF. It tracks it, not quite one for one, but damn close.
Didn't that get a decent amount of money too? Remember the Dave Portnoy ETF? Did that one close too?
That's a good question. I don't think that meme investing is something that anybody would say that they do, but yet the chart is what the chart is.
Okay, someone sent this to me. It's a new study showing that higher levels of financial optimism are associated with lower levels of cognitive ability, and the idea, and it shows like the higher your IQ is, the more pessimism you have, and the lower your IQ is, the more extreme optimism you have. Like the polar sides. And the point was,
I would buy that the people that are like too smart are understandably very negative on the world.
Yes, because they're more educated and they know what's going on.
Yeah, the world is a scary place, and it always has been.
This is why I think we have a negative bias to us now, because in the past, people were just unaware of all the bad crap that was going on in the world and they wasn't just inundated with it all the time. And now that bad stuff goes on, it's way easier to be negative.
You know who I would put in this category? And I'm a fan of his work, so I don't mean this in a bad way, but Ben Hunt. I don't know that he would necessarily describe himself as a pessimist. In fact, I don't know that he would, but he is so gosh dang intelligent and seems to, at least, according to his Twitter feed, seems to view rationally the world as a very scary place.
And I agree with that. I think it's easier if you're a really smart person to be cynical. And I actually read this study because it's not just as simple as this graph. They were saying being overly optimistic all the time naively can get you into trouble with your finances. In terms of you think returns are going to be so good that you don't need to save a lot. But my thinking about this is if you're going to go one way or the other, having a bias towards optimism is actually the smarter strategy, even if you don't have a high IQ, because it's more commonsensical
Well,
to be.
I mean,
think there's my point is
reckless optimism is just as dumb, if not worse. Because that's how you blow
reckless
yourself
optimism
up.
is way better than reckless pessimism. How's that?
But how could you be a reckless pessimist? I don't know about that.
How can you? There's tons of reckless pessimists.
But a reckless pessimist would either be just missing out on stocks, just sitting in cash.
Yes, there's tons of those people. I'm going to
Okay,
put all my money into
rather-
golden bullets and canned goods and
Yeah, but would you rather miss stock market returns or blow
think
yourself
about how
up?
big the audience is for Zero Hedge. Think about that. That's reckless pessimism. Like, I do think that there is this bias towards that, and like I'm smarter than everyone because I'm pessimistic. Like that's totally a thing.
Well, yeah, I mean, optimists just look delusional. Like you don't see the risks.
Like there's plenty of people with a high IQ. Like, give me the 120 IQ person who has the good temperament and is long-term optimistic versus the person who's got 160 IQ and like I'm too smart for everyone. Like that again, bringing back to Buffett. I think Buffett went from being like underrated to overrated to like now underrated again because the fact that he never turned into a cycle. Think about how many hedge fund managers these days. You kept sending me passages from the Dalio book about how he's predicting a depression every 3 years. Buffett never went down that road. He stayed optimistic his entire career, and guess what? He was right. But every other one who becomes a big investor these days eventually turns pessimistic and like has to talk about how bad things are, and he never did that.
Yeah, I think
Warren Buffett is underrated. It's a little bit of a take, but it's kind of true.
Finding the middle ground, right, is probably the best approach. The stock market is biased to go up over time because earnings per share go up. I don't want to participate in the growth of the economy, of capitalism. However, I have to do so in a measured way to make sure that I don't,
you have to manage risks. But I'm saying if you're going to be biased one way or another, give me optimism all day long. You know, I heard a new Warren.
I don't know that I agree with that. I think because I really do think that you could be like a reckless optimist as well and get in trouble.
I'm saying if you're picking one or the other, give me optimism every day of the week.
Sure. Okay.
They were telling norm jokes on the Fly on the Wall podcast. One of the writers, they were each doing their own norm bit, and he said, I'm a pessimist, but I see the glass is half full. I just think it means I have bowel cancer. Anyway.
I saw Norm reel on Instagram over the weekend. I can't finish the joke, but it was
that's the thing. His delivery is part of the thing.
It was Weekend Update, and he reported on when Lisa Marie Presley and Michael Jackson broke up because she whatever and he is. Do you know that part?
Yes.
Okay. Yeah. Classic Norm. All right. So you wrote, what investor would you want to meet if you had the chance?
Oh, okay. So I did an interview last week with Morningstar India. Actually, they asked me some good questions, and they said, "What investor would you like to meet in person if you had the chance?" And this wasn't like a take answer, but my answer was like, I don't have one, really, because, and that's not being like a contrarian or anything, but like, I don't know, like most of these people are not people that I want to emulate because they work 80 hours a week. Their personal lives are probably crap. You know, most of the really well-known investors, I would rather meet a regular person who's got it figured out and has led a balanced life and still figured out how to retire with a healthy nest egg. Is that fair? Like, is there anyone you would want to meet?
It's funny you ask because my trainer asked me this yesterday as I was trying to get my back better. What's the one investor that you wish you could have in your podcast? And I said, that's a really good question. My response was similar to yours. It took me a while. I was like, that was a super lame answer, but Buffett. And then I was like, I don't know.
Buffett is the last of his kind, I feel like. I mean, people pay to have lunch with him and stuff, but
there's got to be a better answer. I mean,
maybe Bogle when he was alive, but I don't. There really isn't someone that I'd say like I'd bend over backwards to meet this person because they would give me so much wisdom that I'd be able to take forward. I just don't think it exists. I'm kind of a never meet your heroes kind of person.
Yeah. Speaking of heroes, the Barry Sanders doc.
It's in my recommendations.
And speaking of, there will never be another.
Okay, save it. I got it in my recommendations. I got a lot to say on this.
Okay.
All right. You saw this piece from Bloomberg going around about inflation.
So Dan Greenhouse tweeted the link to this, which, by the way, Not to brag. I literally wrote this post a week ago, did I not?
Yes, you said prices are everything.
Yeah.
And you showed, because you showed.
I showed cumulative inflation.
Salad dressing.
Yeah, which is, so I'm not saying they took this idea. A lot of people don't, but maybe they did. Maybe they did. Anyway, so Dan Greenhouse tweeted, "You simply cannot convince people that inflation is coming down when this reality exists."
So my whole point on this, like people keep really getting mad at someone told me they're unsubscribing last week because I said higher prices don't make me mad. And the whole thing is like, if I said higher prices made me mad, I'd be a hypocrite. That's my whole point. Like people like you and I should not be complaining about higher prices. That's all I'm saying. People in our position, we don't have the right to complain. There's other people who do. But here's my problem with this. It's denominator blind. So it says it now requires $119.27 to buy the same goods and services a family could afford with $100 before the pandemic. Groceries are up 25%. It has all these numbers. And then on the very little side, on the very corner of this piece, it says hourly and real nominal wages are up 20%. But it says real wages have hardly budged. So it shows nominal wages up 20%. So if we take that 20% figure of wages, this is a denominator blindness thing, and apply it here, you would say water and sewage up less than wages. Pets up less than wages. Major appliances up less than wages. Rent up is the same as wages. Groceries up a little more than wages. If you applied that same logic and inflation adjusted these things like you do with wages, they wouldn't look as bad. And I think that's the problem of the media that I have is they have denominator blindness. They're adjusting wages for inflation. They're not adjusting these prices in the same way. They're not putting it on the same wavelength. They're showing real wages have barely budged, but prices are up 20%. Guess what? Wages are up 20% too. That's the problem I have is that it's a footnote to say wages are up as much as a lot of these prices.
That's a great point. So you can't scream about higher prices and then also say real wages have barely budged. Because real is net of inflation.
Exactly. So I'm not saying higher prices are good. I would rather have lower inflation and much less volatility in the economy, but I'm just saying you can't have it both ways.
Yeah. So Nate Silver weighed in on the disconnect, and he has a great chart showing consumption versus inflation. And he said, and he used an example of like DoorDash or Uber Eats and just how like things just snowball and just everything. It's not just that things are more expensive, but people are also spending more.
Luxuries become necessities.
He wrote, it's not just that the fixed basket of goods was getting more expensive. They're also putting more in their baskets. And I think the TSA data is a good example of this. And there's a million good examples of not just prices going up, but people just buying more shit. Black Friday is a great example of this. It wasn't just, I also think the quantity, like the number of purchases was up as well.
Yes. People feel like they deserve to spend more money, but the prices, it's like, these prices, but I'm still going to buy them. I still think the weird thing to me is that the government gets so much more blame than corporations. I'm not blaming inflation on corporations, but the fact that I put the profit margin chart in here again, the fact that they were able to raise profit margins as inflation went to 9% is kind of ridiculous to me. And I'm surprised that that there isn't just more scorn on corporations for not causing this, but taking advantage of it.
So margins came down a little bit, but they're going up again.
Yes. I also wonder how much would lower mortgage rates really help this? Because I still think the young people / first-time homebuyer cohort is the one who has the biggest gripe against the economy. Obviously, there's interest rate sensitive parts of the economy that are hurting as well. But I really understand young people. If you missed out on this window of 3% mortgage rates and a 50% climb in housing prices in such a short time, how you would be really pissed off. And I think you deserve to be. Like if I was a politician and I'm trying to pull a lever to get sentiment better, I would say, hey, Fed, start buying mortgage bonds and get us back to 5%. I think that would help with consumer sentiment. If I'm pulling one lever. Obviously, people would rather have deflation or something, but that's not going to happen. Claudia Sam at Stay at Home Macro had a piece called Americans Are Better Off. And I think she kicked the hornet's nest again. People are mad at this. But I thought she had some really good charts in here about like what's going on. And the wages after inflation are good again, showing the bottom tier with the highest. So from 2020 to 23, the bottom tier after inflation is up almost 5%. The top 25% is actually down 2.4%, which is surprising. The bottom 50% had a gain. The top 50% actually lost money to inflation, which is surprising. But this real personal consumption expenditures, this is just goods and services. This is the chart. It's slightly after inflation above trend from where we were spending before. And I think this is the whole thing is just.
I mean, this one Nate Silver was getting at.
Yeah, people just aren't changing their habits, or they changed their habits and then they kept them. People can't take stuff away. The other one, overall debt burdens for households are currently near record lows. So this is debt to income and debt to net worth. Both still remain pretty low. So I know a lot of people that want to say like, oh, of course everyone's traveling on Thanksgiving or spending money on Black Friday because they're going into credit card debt. The data on debt doesn't quite show that yet. And I'm sure there obviously are households who are going into more debt. But
guess what? Consumer behavior will change on a dime if we get layoffs. Don't tell me people won't keep spending.
That's been my whole thing. It's going to take a recession, I think, to change consumer habits. I don't think people are just going to, because inflation is high, I don't think people are going to say, all right, we're going to buckle down. It would have to stay high for a number of years, I think, for people to buckle down.
So you definitely think the Fed is cutting in 2024. Where are you with the recession watch for 2024? Yay or nay?
Second half story, can I say that? I would still lean like 60-40 no. I think there's still a possibility. If the Fed steps in and cuts a little bit, and if we could get mortgage rates down and prop up housing activity to offset some stuff that's slowing from higher rates, I think that would help a lot.
So are you saying that we can declare victory on higher rates? That's not going to be the thing that causes a recession. It's going to be something else?
No, I think it's way too soon to say that. Yeah, I think it's too early to say that. I still think the higher rate stuff is affecting stuff on the margin, but it's going to be a bigger and bigger part of the margin as we go forward. Don't you? Because it has to slow corporate investment in everything, right? It's just a way higher hurdle rate to do stuff. And I think eventually, the longer they say hi, the worse it is.
All right, so oil, Carlson tweeted, oil's down 7.1% this month, on pace for the second straight monthly loss after losing 10.7% in October. And Bloomberg had a piece, oil is down, U.S. gasoline prices, are down for 60 straight days. How come people aren't like celebrating this?
We only pay attention. It was the same thing with eggs. Remember, egg prices skyrocketed and people were like so mad about it. Then they go back down and everyone's like, whatever, eggs. I think this is just the way it works. We talked to Sal from Tucrium again. He's going to talk your book next week. And he said he thinks like $50 oil before $100 oil. How many people would have had that on their bingo cards? Zero?
So my question is like, is this like idiosyncratic to the oil market? I don't know anything about oil and energy and gas prices. Or is this reflective of weaker demand for energy, meaning that recession, or is this just China? Like, what's going on here?
Probably a little bit of both. That's the two sides. If you wanted to look at everything positively or negatively, you would say higher oil prices are bad because it means less money in the consumer's pocketbook. Lower oil prices are bad because that means demand is slowing and we're going to recession. That's if you wanted to look at the negative part about it.
And both sound smart.
Yes. All right. I also think there's something to people just being unhappy these days. So the Wall Street Journal has one. Why is everyone so unhappy at work right now? And Americans, by many measures, are unhappier at work than they have been in years, despite wage increases, more time off, and greater control over where they work. The number of U.S. workers who say they're angry, stressed, and disengaged is climbing. Meanwhile, a Bamboo HR analysis of data from more than 57,000 workers shows job satisfaction scores have fallen to their lowest point since early 2020 after a 10% drop this year alone. This is the part that gets me. People chafe against being micromanaged back to offices, yet they also find isolating aspects of hybrid and remote work. This is like, you're never going to be happy then. I don't like it when they make me come back to the office, but I also don't like being alone when I work at home. Guess what? Those are your options. So I think some people just like being unhappy.
Well,
come on. This is like you're never going to win.
No. I don't know if I buy that for this one. So they as they do, they found Lindsay Leisman. And Lindsay is 38 years old. And she said that she soured on her job after having to return to the office 2 days a week earlier this year. Pre-pandemic, she would have been happy working 3 days a week at home. She says, quote, "It would have been a dream come true." End quote. Still, her team's in-office requirements seemed like going backwards and made her feel like that her professionalism and work quality were in doubt. That's the going backwards part. So when Jeff Mackey said people miss the recession or people miss the pandemic,
yeah,
I think there's a lot of legitimacy to that. I don't think that this is an example, and I do think that people like to complain. We said this last week. I think in this example, what Lindsay just described is the idea of going backwards and knowing how good you had it, and then it's a drag. I think that's impacting people's psychology a lot.
Yeah, it is. It's hard.
Everyone that I talk to is like, "Oh, I have to go back 4 days a week now." I don't know if I can do it. I might look for a new job.
I'm surprised workers aren't revolting though and pushing back. That like people aren't coming together and saying, "No, we're not coming back for that many days a week."
So look at this chart: employee satisfaction tumbles. I really do think that a lot of this is get back to the office.
It is funny that the highest level was in 2020 during the pandemic. I think Mackey might be onto something, that people secretly really miss the pandemic.
Everybody loved working from home. And when I say everybody, if you didn't like working from home, you don't need to email us. I'm just saying, generally speaking, people preferred working from home despite all of the challenges.
This is the human nature thing. You can't compare yourself to pre-2020 you and say, I would have been thrilled with working from home 2 days a week pre-2020. But now that I'm working from home 2 days a week and I was working from home 5 days a week, I can't be happy.
Exactly. You've tasted the nectar and it's very sweet.
Yes.
Here's another thing. Long distance relationships between bosses and staff might also be an issue. Nearly a third of workers at large firms don't work in the same metro area as their manager, up from 23% in February 2020. That's wild. If you have no physical interaction with your supervisor and you're not getting that positive reinforcement,
I don't know. Doesn't that sound... I could look at this the other way and say that sounds like amazing in some instances. Yeah, how many people hate their bosses?
This is not black or white. That's a fair point. Anyway, I think what's not in dispute is that there is life before the pandemic and there is life after the pandemic.
Yes.
For so many charts and so many different areas of our lives.
Yes, but it's, imagine telling someone, as crazy as that time was, like, you're going to miss this someday. At the time, everyone would have said, you're nuts. No way.
Yeah, because people felt like they were being trapped.
Yeah.
And in many cases, they were. If you were one of the people in the pandemic who was stuck in a small apartment, maybe with young children, oh my God, it was probably a nightmare.
Okay, I did an update on the layoffs one since we still have layoffs in the doc here. Eventually, this is going to happen. So I wish you could cut off the pandemic stuff because you put that in the chart and it just takes it. So I looked at this, the actual numbers. The current level of layoffs that we're at, in 2007 to 2019, we never got lower than the current level of layoffs at any point in there.
Wait, I'm sorry, say that one more time?
So from pre-pandemic, the data goes back to 2007. 2007 to 2019, we never got lower than the current level of layoffs. So I'm saying layoffs are still lower than they ever got pre-pandemic in the first.
Oh, interesting. Got it.
So layoffs are still very low. So unemployment.
Well, that's my question. That's my question.
People are not getting laid off, really.
So does there have to be a catalyst?
Are you saying what causes this finally?
Yeah, I'm saying what's going to be the spark? Maybe there doesn't have to be a spark. Maybe the interest rates really do take 2 years to filter through the economy. I don't know.
This is the weird part about it, because usually a recession is caused from excess in the economy, and then the Fed raises to take those excesses out of it. But if you want to define excess, wasn't it in the housing market and the Fed already kind of snuffed that out? So you're right, like, what else is going to go totally overboard unless it is just the Fed keeping rates higher and that eventually just cycles through and it's a slow death by 1,000 cuts. I don't know. All right, so we have no new highs in the stock market yet. We're close. We're within like spitting distance for the NASDAQ 100 and the S&P 500. But we do have new highs again as of this morning. Case-Shiller National Home Price Index is up again. New highs in the housing market. Annie Lowry at The Atlantic had a piece, and the headline I thought was a good one. It will never be a good time to buy a house. And she's talking from personal experience. She said she moved to Brooklyn. I can't even imagine how expensive it would be. Do you think
she moved to Brooklyn or from Brooklyn?
I think she moved to Brooklyn and tried to find a house and said it was just laughable. It was never going to happen. What do you think the feeling would be if we picked up all 7 million people in New York and moved them to like Pennsylvania or Ohio or Michigan or Indiana, how different would they think about prices and inflation? Because I mean, New York was already New York was already dealing with, like, everyone complains about high prices now. If you're a New Yorker, you've already been living with high prices for your whole life if you've lived there. Like, New York has already been a step above everything for prices. So I'm saying, like, how many people eventually go like, all right, I'm out of here? And that's been happening a little bit, but that migration, you would think, with unaffordability has to be skyrocketing. So interesting stat from this one. At this time, 15 years ago, real estate agents had 2.2 million vacant housing units available to show prospects. That number has dwindled and now sits at 732,000, despite the country having added 30 million people to its population in that time, which is kind of crazy to think about. 30 million more people in 15 years.
I do agree. Like, I think that if rates come down, I don't know that home prices are going to skyrocket. I think that might have been a bit much when I said that a couple of weeks ago.
I think we just need more activity. That's my point. Like,
but the prices have been reset. The home prices are not going to come back down to what they were.
No, you're not getting pre-pandemic home prices again. She says it's not going to be a good time to buy a house for a long time. How long? I put that question to a few housing economists and real estate experts. Their response: who knows? A decade, maybe in 2030, we could start to see some relief. Daryl Fairweather, the chief economist at Redfin, told me.
Relief. What do they mean by relief?
I think it means
in terms of rates or prices.
I think it just, like prices a little bit, like, and that's the thing. It does seem like now, this is something that we all have, where we think the current scenario, the situation is going to last forever, and it never does. Like, people in the 2010s.
I'll take, wait. I might take the other side of that. For the housing situation that exists today, where when what year was it? Where I think it was 21. When the economy reopened and people started putting their houses on the market, that there was like 20 buyers for every listing.
Right.
I think that trend will stay in place for at least a few years because of the 75 million millennials.
Yes. So here's my take on this. I think demographics are destiny in the housing market. And I said this like 6 years ago. Millennials in the 2020s are going to be buying houses. There's going to be a shortage because of that wasn't like some great call by me. That was just like math. And in the 2030s, we're probably going to see more supply than demand because most of the millennials will have bought a house that are going to buy a house. And some of the boomers are on the margin are going to be selling more. And so I think in the 2030s, it seems like a long time to wait, but I think that's when it's going to have to happen for it to like really shift, where supply is going to like seriously outstrip demand for a meaningful period of time.
So the stress in buying a home in terms of competing with a lot of other buyers, I feel like that's structural for at least a few more years. Possibly. Maybe through the end of the decade.
But I just think lower rates would help in terms of like just getting more activity and having more options to buy, right? And resetting those monthly payments a little lower, even if prices rise a little bit.
All right, let's talk about a dumb survey that went viral over the weekend.
More and more.
So what's that?
There's more and more of these.
Empower survey.
Wait, before you get into this, someone tweeted me or emailed and said, like, don't you guys understand how like surveys and sampling works? This is how it works. Like, we understand sampling. Our point is that like the way that you ask a question, like sampling makes sense. You can't ask literally everyone in the country to come up with, but the way that they ask questions and the way that the sentiment acts like that, those kind of surveys can be messed up and they're not reflective of reality, even if the sampling thing works. We're not saying statistics doesn't work. We're saying sometimes the way that these surveys are conducted are not accurate.
So here's a great example of why surveys are bullshit. 59% of Americans believe money can buy happiness. Bullshit. If you were asking people honestly, I'm going to say that number is like 98%.
Yeah, that's true. And the actual number of people that can buy happiness for?
Are you kidding me? 59%? So people answer how they think they're supposed to answer in many cases. No, right. Of course money doesn't buy happiness. Oh, give me a break.
Because people always say money doesn't buy happiness.
Right, exactly. It's exactly. Okay, so they asked the price of happiness for your desired net worth. And millennials are so far beyond everything else when you compare people's answers versus their actual net worth. So the gap is sort of hilarious. But the thing that really made people go nuts was the annual salary by generation to feel happy. And so for all people, it was $284,000. I don't know what the median salary is in the United States. Ben, do you know that number offhand? Is it? I don't want to give a number and embarrass myself.
It depends. On household, it's like 70 or something. Individual, it's like 50s-ish, 60, something like that. Yeah. But yeah, it's obviously that the number is ridiculous.
So anyway, Boomer said 124,000. Gen X said 130,000. Gen Z said 128,000. And inexplicably, Millennials said 525,000.
This chart looks like a giant middle finger.
So I don't know exactly.
Which would put you in like the top 2% of all incomes?
Probably top 1%.
Yeah.
Maybe even more. I don't know how to explain this. Do you have any thoughts on?
No, I can't. There's no way that millennials really feel this way. I have no explanation for it.
All right, here's another reason number 4 million why surveys are bullshit. How much time have we spent over the last couple of months? And I think we've reached peak animal spirits talking about the disconnect between the economy and people's feelings. Can we say that we're gonna pare back on that theme?
There's nothing else to. At this point, it is what it is.
Yeah, we're not going to retire this theme.
There's a million different variables, and yeah.
I promise this will be more or less the end of it from us. But they asked a question: the state of American happiness today. So okay, we spent the last couple of months talking about how miserable people are, and yet they ask at home. People say 80% overall happiness. People say 80% happiness at home. Overall happiness 75%. So this survey is a 75% overall happiness, and in other surveys, it's like 14% of Americans think that their personal financial situation has gotten better since Joe Biden took office. How do you explain the gigantic gaps in how people feel based on various surveys?
What if they asked the state of happiness on Twitter? It would be like 3%. Social media, 5% happiness.
75% overall happiness. Oh, cool. So I guess people are happy? Is that what we're trying to say here? Or maybe surveys are kind of bullshit.
Yes. Or just broken. All right. The Wall Street Journal had a piece about fighting with money that a researcher did. Research found when partners disagreed about mundane expenses, such as grocery bills and shopping receipts, they tend to have better relationships. But if you fight about like bigger things like contribution of household finances or perceived irresponsibility in spending, that's particularly detrimental. So fighting about the little stuff is actually a good thing because it means that you don't have the big stuff. If you're really fighting about the big stuff, that means there's probably something else simmering under the surface that you want to get out.
True. If you really have money issues, you're probably not bickering about the small stuff. But if you bicker about the small stuff, it's actually like a luxury, right? Because you don't really have anything to complain about.
Do you and Rob never fight about money?
No.
Not really?
No, Robin is pretty far removed from our financial situation. Not because I don't try and bring her in. She doesn't really care, and I'm pretty sure she has no idea how much money we make.
My wife's probably in the same boat. I got a question for you, personal finance wise.
Okay.
Why do we still have ATM fees? If you go to an ATM that is not yours, you pay like a $2.50 fee, and then your bank charges you like a $2.50. I know some of them. Why does that still exist? That's ridiculous to me. They have to pay like $5 to take out $20.
That's great.
Is that just we just do it because they can?
How much money do you think they squeeze out of the consumer's pocket a year?
Seriously.
It's got to be billions. It's got to be
ridiculous.
Billions. No?
I did that this weekend. I'm like, they just charged me $5 for 20.
I, for the most part, never pay ATM fees. I always go to a Chase unless I'm in like a casino.
That's what I usually try to do as well. Which you can actually usually find one of those, but what's this Bill Gates thing?
You know who doesn't have personal finance problems or money problems? Walter Bloomberg tweeted, Bill Gates earns nearly $500 million in annual dividend income.
That's because he had something else simmering under the surface because he got a divorce recently. So him and his wife must have been fighting about the big stuff, not the little stuff.
He received $464 million in U.S. dividend income from his investment portfolio so far this year.
Yeah, but adjust that for inflation, then was it really?
Yeah.
Okay, Dave wrote this about our deep impact thought last week. Ben, in the deep impact scenario, there's a 90% chance of a meteor hitting the Earth. I would take every penny I could possibly get my hands on and leverage long with reckless abandon. If I'm right, I'm rich. If I'm wrong, it doesn't matter. Pascal's wager.
Yeah.
That's pretty good. That
Yeah,
makes
that's a good
sense.
point.
That's like the Art Cashin thing, like if there's
Yeah, I was just
the
thinking about that.
Cuban Missile Crisis, right?
Yeah.
All right. One more random
Well, tell
thought
that story.
here.
Tell that story real quick.
So wasn't it the Cuban Missile Crisis and someone said, sell all your stocks? What happens if there's a nuclear war? And Art Cashin said, no. You go buy hand over fist. If there's a nuclear war, who cares what your stocks do? If there's not a war, you're going to be rich because the stock markets are going to come back.
Right.
Which is pretty good. All right. I saw an old truck with some rust the other day. Think about it. You never, back in like the 80s and 90s when we were growing up, you would see cars with rust on the road all the time, like super rusted out. You never see cars with rust anymore. I saw it and it was surprising to see actual rust. Like, I feel like we've done away with rust on our cars somehow through the power of technology. Cars don't rust anymore, or people just don't hold them long enough.
That's a great point. No, I think paint has improved. I think we've spoken about this in the past. Did your parents drive? My mom back in the day drove a Volvo with like the back seat where your like knees were like pressed up against the glass basically, and you're like driving backwards.
The station wagon.
The station wagon.
Station wagon was the SUV of the 1980s and 90s.
How dangerous
until
was
the
that in
minivan came
hindsight?
along. Yeah, probably couldn't have been great. We used to my parents used to drive a conversion van, and the benches were on the side.
What the heck is that?
Like a big van, like you'd assume a person is trying to get little kids into it with his candy kind of guy.
Oh, why did they drive that? Was it for work?
I have for kids, and the benches had no seatbelts. We had no seatbelts in the back. We just were flying around. When I was little in the 80s.
What did you have 8 siblings? I don't understand why they drove that car.
I have a good question. I have no idea. This is like before minivans were around. The minivan came around in like the 90s, and that changed everything. Late 80s, early 90s, probably. All right, recommendations. You mentioned Bye Bye Barry on Amazon. I watched it. He was my hero growing up. I loved this. And the funny thing is I remember when he retired early and walked away, and I wasn't mad at all. I totally understood it.
That's incredible.
You
weren't mad? You're not mad about
bit.
Inflation. You're not mad about Barry Sanders. You're an even killed sort of guy. How are you not mad?
Because the Lions were so inept at running that franchise that I totally understood it. I was like a sophomore in high school.
Okay, you're very mature.
High school, probably. And he was my hero. I obviously I was not compare myself to him, but like I tried to be Barry. I practiced spin moves. I will say
you ran in the Silverdome?
I did run in the Silverdome. He was my hero, and he has the greatest highlight reel of any football player in history. And I don't think there's a close second.
Not even close.
There's never been anyone like him before, and there never will be. Like the moves he made there's never been anything like him. And
you know why?
I felt bad for him for being on the Lions. I really did.
His body was like a sports car. It was so low to the ground, and his thighs were enormous, and his balance was insane. And he bounced off tacklers, and he had breakaway speed. Like, you're right. There's never been a football player like him.
Yeah. So I thought it was really well done.
I thought it was really funny because he was probably the most humble superstar. Not probably.
Yeah.
The most humble superstar of all time.
A person like that couldn't exist today.
No. And his dad wanted all of the limelight.
Yes. It's a good story. He's definitely a unique guy.
But there was, I remember when he retired, and there was, like, why did he do? I mean, this is not a great mystery. Like, he was just done.
Yeah.
Oh, I took a picture of this. Because the season in 1998 where he ran for 2,000 yards. Oh wait, I thought I took a picture of this. Hold on, let me just Google this. So, Barry Sanders, 1998 game log. So in 1998, when he had 2,000 yards rushing, which had only been done at that point, I think Walter Payton at the time. I don't know, and OJ. Maybe only OJ. I can't remember.
It was just OJ, yeah.
Okay, but anyway, in the first 2 games of 1997, 1998, he rushed for 33 yards in the first game and 20 yards in the second game.
That's right. He 53 yards in the first 2 games, right?
So 53 yards in the first 2 games. And then these are the...
So 2,000 for the next 14.
So listen to the rushing yards for the next 14 games. 161, 113, 139, 107, 215, 105, 105, 105, 108, 216, 167, 137, 138, 184.
Yeah, one of a kind.
Unbelievable.
The doc was so good.
It was really good.
I was looking to watch a Thanksgiving movie besides Planes, Trains, and Automobiles because, of course, I watched that. And I found a suggestion was Funny People, which I don't know if I
How is that a
consider
Thanksgiving movie?
They have a Friendsgiving in the movie.
Okay.
It's a long movie, so it's not really a Thanksgiving movie, but it got me thinking. That was like the end of the Judd Apatow line. You know, it was Sandler and Rogen and Jonah Hill and Aubrey Plaza.
Yeah, what year was that? 11?
Leslie Mann and Jason Schwartzman and Aziz. We don't have those ensembles of comedies anymore. Maybe it'll come back someday, but I feel like my whole life we've had ensemble comedies where young people are coming up. You know, in the 90s, it was Sandler and Farley and Chris Rock and all these people and Spade. We just don't have that anymore.
Shit, that movie's like 15 years old.
Yeah.
Came out in 2009. Oh my God, we're old. Well, you know why? Actually, this is not the reason why. Well, they don't make comedies, number one.
Right.
But they could never pay a cast like this.
Right. That's what I'm saying. You have to find them young. Maybe the young people now are just going to TikTok or YouTube or something and not being actors. I don't know.
I feel like the first half is a lot better than the second half.
Yes, the movie trails off. You can watch the first 2/3 and you're good.
Okay. So there are movies that you've seen a million times. Forrest Gump, Shawshank, all the Rockies. And I think the reason why, at least for me, is because they were on TNT and USA. And back in the day. All the time.
Before streaming existed.
Yeah. And I guess now it's like, you know, HBO is like Casino's always on. I've seen that a billion times. But I very rarely will stream a movie to rewatch. I'd say 97% of the movies that I watch are new to me.
Okay, I rewatch movies all the time still.
Okay. But I decided to rewatch Prometheus and Alien Covenant. I guess because we were talking about Ridley Scott last week. F***ing awesome. I know Prometheus, I love those movies because I've seen Prometheus a million times. Alien Covenant was way better than I remember.
That was pretty decent. Yeah, because it was a lot of the same characters too, right?
I mean, Fassbender was in it. Yeah. Way better than I remember. All right, somebody emailed us. Gentlemen, I've never emailed into anything in my life, but I watched When Evil Lurks last night, and I had to make this my first. I loved it. However, there were 5 scenes that will haunt me for the rest of my life. My wife, who thinks I am insane for watching this stuff, constantly asks me, how do people come up with this? Doesn't that disturb you? What is your response to that? I had a similar experience with my wife when I was watching Speak No Evil, which like really and truly hurt to watch.
How many different horror movies you watch with the word evil in the name?
A lot. Speak No Evil, there should be a warning, like this will upset you. It was like that upsetting. And my wife had a similar reaction. And it's a really interesting question. Like, why do people, myself included, enjoy watching things that are like seriously disturbing?
I think because everyone has like 5% of them that is a little disturbing and just wants to let that freak flag fly.
Yeah, I don't know what the answer is because I hate to say that I get pleasure from watching it because it's so some of this stuff is so demented. Like there was a scene, I might have said this. There was a scene in When Evil Lurks where like I literally had the reaction to like close my laptop and like chuck it. So like what? I don't know. Can't explain it.
I can't either because I'm not a big fan of that feeling.
Oh, one more thing. Speaking of the Barry Sanders thing, you tweeted over the weekend that there's nothing like college football, and I'm not here to shit on college football because growing up in the Northeast, it's just not something that we do. Like, there's not. Right.
I understand. New York doesn't have as much of a college. New York is a pro sports.
Well, there's no colleges here. I mean, there's like Rutgers and St. John's, I guess.
I get it.
So my and I know people are super, super passionate about college football. My question to you would be, isn't it difficult or confusing to follow in the sense that isn't there so much turnover because players just don't stick around that long?
Yeah.
Or is that?
No, that's a fun. Yeah. Jerry Seinfeld said you're cheering for laundry, but.
Okay. Is that like the fun part of it?
Yeah,
like rooting for like the new freshman?
Yeah, it changes. And it's just the pageantry and the emotion and the amount of people that like get into it. And it's like every week means like everything because if you lose one game, you're kind of out of the playoff picture or whatever.
Do you know the players on the field or do you mostly root for the team?
No, I know the players too, but it's both. But I grew up where college football was the biggest thing to me. I think that's part. Plus, I rooted for the Lions, so it was not like they were always so terrible. that they came second for sure.
How there? Let me play this. So on Thanksgiving, I bet on the Lions, and they didn't.
So did I.
win.
Never bet against your team because you lose twice.
You bet on the Lions?
Yes, bad idea.
So Logan was in the playroom and he was crying, and I didn't know why. So I walked in. So I watched I watched The Ring to see what he was crying about. I think he got stuck in the little room. But listen to this. You hear that?
That's pretty good. Holding.
So Logan is in the living room crying, and I'm screaming at number 75 of the Packers was clearly holding, and the refs missed it.
Clearly. All right. Time to give up from gambling. All right.
One more thing. You know what? I'm not going to say it. Where do people email us?
Animalspirits@thecompoundnews.com.